Hi, this is Mike Sheehan from financialprof.org. Today, I want to spend a few minutes talking about final expense insurance. Final expense insurance is something that can be difficult to talk about. This, as the name implies, is an insurance policy that you would get to cover final expenses. I remember having this conversation with my parents, and my father, having some experience in insurance, understood the value of having a final expense policy. And it's basically a life insurance policy that is purchased for the purpose of covering the final expenses. You know, we're well aware that there's costs involved with a funeral, and that can be anywhere from $10,000 to $20,000. But there's also other costs that are incurred when somebody passes away. Today, it's very common that many of the children, adult children, and, depending on the age of the person, it could be adult grandchildren who don't live in town. And I've heard people that will purchase a final expense policy with the idea that not only will it cover the final expenses, but it would also help to alleviate any expenses, travel expenses that the mourners, the families would incur. So another reason, some people will purchase a final expense policy as a way to leave a legacy. They may have their funeral costs covered, but now they'll have this final expense policy that will be left to the grandchildren. And some will purchase a final expense policy so they are not a financial burden on the children. It's a conversation that you have to have, and it's sometimes difficult because the person that's looking to purchase that final expense policy may be 60, 70, 80 years old. So you have to expect that there could be some underwriting or there's going to be some issues based on their health. Good news is many companies realize this, and many companies have become more liberal in their underwriting, which has made the option and the opportunities to purchase that final expense policy a little bit easier. In closing, I'm just going to give you kind of the three standard types. One is a full-fledged policy. Person did not have any health issues that prevented them from getting the coverage at 100%. They purchase a $20,000 policy. They pass away a month later. The beneficiaries receive $20,000. Then you have a modified. A modified is a policy that maybe there's some health issues. It's $20,000, but it is only going to cover you at the full amount after 1 to 2 years. So what that means is if you bought a $20,000 policy and the person died in the first year, you might get your premium plus 10% bonus on that money. Second year, same thing. You would get your premium back plus 10%. And then in the third year, that particular person passed away, you'd get 100%. Those are very popular because some people, based on their health, this is their only option. And then you have the third type, which is more of a accidental policy. Those have no medical underwriting whatsoever and will pay that final expense amount in the event that the person died of an accident or of an unnatural cause. But the first thing to do is to have that conversation to see what fits. So you can reach out to us at financialprof.org. We'd be happy to give you the options that would be available. Again, we write for 20 to 25 different companies, so we do the shopping for you. So until next time, make sure to share, like, subscribe, turn on your notifications so you don't miss our next video. Make it a great day.